Welcome to Biz Wire. I'm Joseph Nordstrom in Beijing. The price of gold has fallen to a 10-week low as investors are more optimistic about the U.S. economy, and the precious metal is seeing less support from Chinese buyers. Gold is still up 6.6% on the year, but down 8% since a high in March after the 28% decline seen last year. On Wednesday, gold futures for June fell to 1,281. Analysts say they see support from buying physical gold when prices drop below 1,300. Many see gold being under pressure as the U.S. is picking up steam, the Eurozone is out of crisis mode, and China's economy, while slowing, remains relatively strong. Recently, Chinese officials announced that gold imports would be allowed to enter through Beijing directly. Before, Hong Kong acted as a gateway city where 70% of gold came in, and a popular place for mainland Chinese to buy due to the city's low taxes. Analysts say this could allow China to increase its gold reserves more discreetly without having the transactions made public as they are when gold enters through Hong Kong. China and India are the world's largest gold consumers, and thanks to plentiful reserves and new mining technology, China is the largest producer. But the World Gold Council says demand from China is likely to fall this year after so much buying last year. China hasn't released its reserves of gold since 2009, and analyst estimates vary widely. What is known is that Chinese companies use gold and other commodities like iron ore and copper as collateral for financing, which can be used for investment or speculation. Reuters had a much-discussed piece about this, reporting that the World Gold Council says Chinese firms may have accumulated over 1,000 tons of gold for financing, which, if true, would account for over 1/3 of yearly global production. This financing practice could come under closer scrutiny from regulators, which would put great downward pressure on prices. This has already contributed to the fall in global copper contracts. It is believed that a lot of demand from China stems from a lack of faith in their own economy and currency, even as the long-term trend of its yuan currency is upward despite its performance so far this year. Chinese suffer from low bank deposit rates and a lack of investment options. Stories of Chinese aunties buying gold has propped up the precious metal, but if the global economy continues to gain momentum, it's unknown what these shrewd aunties will do and if they have the purchasing power to keep gold bugs buzzing. You're watching Biz Wire on the Blue Ocean Network, China's first and only privately owned English language broadcast media. Our full episode can be seen on our website, BON.TV/biz-wire. Let's turn now to Neil Jones for a quick look at a few stories that are buzzing through the markets.